Welcome to HDFC Securities 5-minute market wrap-up. It recaps the key developments in the markets during the week ended 13th October 2023. In key macroeconomic news, India's CPI eased to a 3-month low of 5.02% in September 2023 from 6.8% in August 23, largely driven by an easing of vegetable prices. In the US, two US Federal Reserve governors spoke on Monday and suggested that the US Fed may not raise interest rates because of the recent spike in bond yields. In UK, the GDP expanded by 0.2% month-on-month in August 23 versus a decline of 0.5% in July 23. In US inflation, core CPI rose by 0.3% month-on-month in September 23, slightly higher than the 0.2% in August 23, but broadly in line with expectations. In market movements last week, Nifty was lifted earlier in the week because of dovish comments by US Federal Reserve officials. Nevertheless, Nifty closed up only 97 points or 0.5% during the week. Broader markets also fared reasonably well, with both the mid-cap and small-cap indices up by 0.7 to 0.9%. Among key sectoral gainers, Nifty Realty gained 4.3% on record pre-sales by some developers. Nifty Auto was also lifted by expectations of a strong festive season. Among sectoral losers, Nifty PSU banks witnessed profit booking. Index was down 3.2% this week. The Nifty IT index corrected by 1.7% after largely disappointing results and guidance by majors like Infosys, TCS and HCL Tech. In key market movers during the week, Nippon India AMC shares jumped by 18% after HDFC AMC reported strong results and market built up expectations of strong results from Nippon AMC as well. Hitachi Energy India shares rose by 12% after the company said that they will deploy the first ultra-fast charging e-mobility solution in Italy. Phoenix Mills rose by 12% after estimated retail collections grew 23% year-on-year. ICICI Prudential Life Insurance Company corrected by 7% after company announced a 4% year-on-year decline in annualized premium equivalent. FII activity was mixed this week. FIIs were net sellers again with sales of 2,200 crores in cash. DIIs continued to be net buyers with net cash purchases of rupees 4,000 crores. US markets were supported by relatively dovish comments from US Federal Reserve officials, and the S&P 500 index closed up by 0.4% during the week. In this section, we discuss select reports published by the Institutional Equities Research Team of HDFC Securities. Please note that these reports are available on our website. Our team initiated coverage on Stylum Industries with a buy rating and a target price of rupees 2,300 per share compared to current market price of rupees 1,741 per share. Stylum has industry-leading growth and EBITDA margins. We expect Stylum to post strong 15 and 23% revenue and EBITDA CAGR between FY23 and FY26. The subtitle of our real estate report this week was "Whatever is being launched is being sold." Real estate developers are reporting record pre-sales in what traditionally is a seasonally weakest second quarter. Among companies under coverage, we like Oberoi as it has no competition in the premium real estate segment. In southern markets, we like Sobha and Prestige. Infosys reported the highest ever deal wins, but this was offset by sluggishness in volumes and slower pace of conversion. Our team has cut the target price by 3% but maintained an ad rating on Infosys. In autos second quarter results, we expect four-wheelers to see margin boost quarter on quarter. Volume growth has decelerated in quarter two, but that is largely because of seasonality. Our top picks for the sector are Mahindra & Mahindra, Maruti Suzuki and TVS Motors. In auto ancillaries, we like Bharat Forge. That is all for this week. Please refer to the detailed disclaimer on the screen. Please note that the securities discussed in the presentation are for education or information purposes only. Thank you.